Jacko, thanks for coming onto the programme. The results, as expected, given the environment late last year, but you seem quite cautious with your outlook for 2010 as well. When would you expect a full normalisation of conditions for the banking sector and for Standard Bank?
Well, it's been a very tough 2009, clearly, and we can see an improvement, but the improvement is on the edges. It's marginal, I think. Of course, we have a number of Standard Bank specific factors, I think, that make us feel fairly confident that the earnings should increase off this base in the current year. But I think 2010 is still going to be a toughish year, and then hopefully we can move forward strongly from there. But we did say today that we, as a management team, are targeting this year to get our earnings back to the levels of a year ago, 2008.
Well, talk to us perhaps about some of those Standard Bank specific factors, because I'm sure one of them must be emerging markets. You point out in the commentary that emerging markets are leading the world out of the recession, and of course Standard Bank is the most exposed of all of our banks to growth in emerging markets. How might that help you, or how might that cushion you in the year ahead?
Well, clearly, one of the advantages that our bank has is that we are not entirely reliant on the growth rate of South Africa, which does look as though it's going to be relatively modest in the year ahead. We do have the benefit of fairly substantial operations across the African continent, and lots of business being conducted between countries in Africa, businesses in Africa, and markets like China, Brazil, and so forth. So clearly, for so long as you are seeing strong growth in those economies, which we are doing, that should be a little bit of a tailwind for us, which some of our competitors don't have.
Well, of course, your credit loss ratios already showed an improvement between the first half and the second half of the year, driven by improved retail loss ratios. How about corporates, though? Some of your peers only expect corporate bad debts to peak in the middle of this year. What's your experience at Standard Bank?
We have, as you say, already seen a decline in the overall credit loss ratio. Having said that, we still do have an inflow of non-performing loans. So we still have some problem loans, but because we started providing early in the cycle, we are now seeing the provisioning levels flattening off and in fact declining. The corporate situation across the continent for us, we've seen a number. I mean, the big increase in the bad debt charge actually came out of corporate loans, and it's perhaps not entirely surprising that in the aftermath of the global crisis, that you would then have some companies, in some of the key markets in which we operate, experiencing some difficulties. Having said that, South Africa at a corporate level has actually performed pretty well. It's been smaller businesses in South Africa that have struggled somewhat.
How are you monitoring the financial position of your corporate clients, Jacko?
Well, of course, there's only one way in corporate banking to know what's going on, and that's to try and stay as close to your customers as possible. Clearly, that in itself doesn't guarantee anything. If a company does finally get into difficulties, you may, being close to them may not solve the problem. But we've tried to be, where at all possible, proactive, because it's far better for a bank to try and solve the problem, to reschedule things, etc., rather than foreclose and sell assets and so on. And that's certainly been our philosophy through these difficult times.
How about credit risk? What sort of credit risk are you now opening up Standard Bank to? And what sort of appetite are you seeing from retail customers as well as corporate customers? I mean, as you open up the sluice gates, are they coming forward for loans?
Well, I certainly wouldn't even describe it as sluice gates. All our changes that we've made in terms of loosening our credit criteria have been, I'd say, on the margin. It's been for specific customer segments or a particular suburb where one might see an opportunity, where we're underrepresented in the mortgage market, etc. So it's been very focused where we've been looking for opportunities. We definitely haven't opened the sluice gates, but it is also true to say that I think having been hurt, consumers on average are not looking and rushing to take on new debt. I think many people feel that it's a time to save and to build to build your nest egg and savings. So we are actually seeing that we're doing well on our transactional business, on our savings business, and that seems to be a trend. On the corporate side, it's very sector specific. If you've been in infrastructure, you may have big borrowing needs. If you've been a retailer, credit retailer, you may well not be needing to borrow that much. So it's very specific to the sector that you're involved in.
Jacko, you say in the commentary that you're concerned about the unintended consequences of some of the proposed changes to banking regulation. And of course, we saw yesterday a pullback in banking shares in the US just regarding the Volcker rule and proprietary trading. What are some of the unintended consequences that could affect Standard Bank and Standard Bank's investors and customers?
Yeah, I was talking more about the global kind of changes because I think that there's clearly a desire on the part of politicians and central banks and so on in the developed economies to address the problems that those countries have experienced. The trouble is some of the rules that are perhaps being put in place could hurt emerging markets. They could hurt developing countries and make the cost of funding for countries and for companies and in those countries more expensive, because if you impose too many rules and too many prohibitions, you might well find that it's just harder for a country like ours or a continent like ours to raise the financing it needs at competitive prices. And we all know the big financing needs, for example, that South Africa is going to have over the next few years.